Hi, this is Randy Finney with Right Side of the Chart, and this is a pre-market update for Friday, May 27th, 2022. I figured I'd get one out early. There's just a lot of things I'm watching. Give you a couple charts today. I'll start there on the indexes, but I'm also looking at. I want to do an update on the metals, treasury bonds, and natural gas and anything else that stands out. I've been hyper focused on the markets, giving you trade ideas there. Really, a lot of updates. And again, I think because there's opportunities to be made when there's volatility. Um, and in a nutshell, you got the post this morning already sent out showing you we're at that 301 resistance, which is also the bigger resistance, or as big, same thing on NQ level I've had here for quite a while, 12,350 right there. You get a little bit of divergence, but I'm in buy the dip mode. So for any pullbacks, as I said this morning, I gave you levels that would offer an objective long entry or add-on. Hopefully you're long now. We've had a nice move off the bottom so far, but I still think there's a lot more meat on the bone. And look, here's the thing: it's easy. If I'm wrong, these are levels. We've got nice pullback here. If you get a pullback to this trend line, there's a little support right there as well. Over these recent lows, you got an uptrend line, pretty clean right there, and then a big level there, because that was the level said yesterday before we even took it out. If that gets taken out, I expected a powerful rally, and that's exactly what happened. So, okay, point of that is not to say, oh, well, hey, that panned out. It's more so that it validates what I was seeing. That this wasn't a random number, when we did take it out, we blasted right on through there. We had it checked a lot of times, and the more hits you have on a level, especially when you have powerful technicals setting up, divergences, key stocks at support, a lot of bearish sentiment, that sets the stage, and that's it. So we broke out. So whether you want to call that a random, call or not, it's hard to argue that level, is not technically significant, because again, all the reactions, the fact it broke out, it was impulsive. Now, where am I going with that? Well, that means it's been validated as a significant, it was resistance, and in technical analysis, it's very simple. Resistance, once broken, becomes support. Does that mean that I will guarantee you if we pull back to that level that we bounce? No, but I can guarantee it's support, and I can guarantee you most likely at least a good number of buyers will step in. We'll never know with absolute certainty until hindsight whether there are more buyers or sellers in the market. And also, I'm doing this update in pre-market to, as I said this morning, I didn't expect, I told you last night we're going to set up some flags, but I kind of it just temporarily, missed or wasn't thinking about the GDP and employment reports coming out today. So that's why I wanted to get that out to you this morning, in case you saw the breakout of the flag. It broke out, but I wanted to, before anybody jumped on it, say one of two things. Number one, the flag came right under. This is the resistance we hit yesterday, right? Big resistance, pretty big. You got a downtrend line here as well. So the flag broke out. But this is where you kind of, a lot of the stuff goes in. This is why I do these videos that can go 20, 30, 40 minutes sometimes, because there are a myriad of factors that come into play when trading. And one of them is market's not going to go anywhere in front of a big FOMC meeting. It's not going to go very far in front of a big GDP report. GDP is one of the biggest, it's the earnings, if you will, for the United States of America. That's pretty much our earnings report. That is what a recession is defined as: two declining quarters of GDP or contracting quarters. It's the gross domestic product, the sum of all goods and services in the U.S. So it's a big one, anyways. And so are employment data. So that's what I wanted to say. And these are the things that you need to factor in. That's why. On face value, if you're in a vacuum, and a lot of traders probably take a break out of a bull flag like that, but and I still think it's going to play out. It's just there's going to be a stall here. Normally in a bull flag, if there's nothing like traders getting, not wanting to take a big position in front of a big market moving report, and who does? It's like taking a stock right before they report earnings. Yeah, you might be right, but if you're wrong, you're going to be punished, potentially very bad, especially in this market. It's the same thing. Prudent traders, you do this long enough, you don't want to, take a position or have too big of a position right in front of a market moving report. So that's what happens. So it's gonna, like I said, this morning we'll probably flounder around, and that's what it's been so far. Okay, so just to kind of reiterate here, as of now, and unless I start seeing levels that quote unquote should hold on a pullback taken out. If I start to see that, a little minor downtrend line, it's not much, but it's something. There's a secondary downtrend line. 12,085 was a big resistance level to me for the last week or so. Now that it was taken out impulsively, that's a big level on a pullback. So I will view, no matter what, I don't care what GDP comes in at or what the employment numbers. It was all about the market's reaction. So if it's a knee-jerk reaction or a snapback to that level, I'll add to positions. If we get taken out, if that gets taken out, yeah, I'll be honest with you, I probably wouldn't add anymore. I'd sit tight because I'm pretty long right now as it is, pretty chock full of longs, and any dry powder I want to deploy there, that would be it. So I'm not gonna. Again, it's all, everyone's different. If I didn't have any positions, I might scale in and continue down. But I would tell you, I'd buy down to there, not below it. That's just me where I'm at right now, due to my current positioning. But I also, could say I don't want to see that. If that gets taken out, and anything more than a whipsaw I'm talking about. Whipsaws are common, where you dip down below and then come right back up. That's not good. And then then you have this support level, and then you have this secondary trend line. And it just increases the odds that then this was is just a reflexive, dead cat bounce, counter trend rally. And at that point, I will have been stopped out or scaled out of longs and maybe back short. So that's my trading plan. What I think will happen, there's divergence here. I need to recognize that. I always take heed of these divergences, especially on the 60-minute time frame. The last time we had a divergent high was right here, right after T. I have different targets on the futures I gave you before I left town on vacation. That was Thursday before last when the market bottomed there, and then we had the whipsaw. So you had the negative divergence that formed. I mentioned it in one of the comment sections there. I was watching that, and that was also when T2 on the QQQ was hit right there. And so that was that catalyst there. So we have a small divergent high. It's worth noting, and I suspect, again, any pullbacks will get bought up, and I'll treat them as buying opportunities, and we may not pull back. We're not going to know. By the time this video is over, the GDP is going to be out, so will the employment report. So that'll be the first big move in the markets today. Then 9:30 open. I always say that's when the starters step onto the field. What I'm talking about is, you get the second stringers right now. A lot of retail traders playing in the pre-market session and doing all that. The big boys come onto the field at 9:30 a.m. because that's when they can move. Hedge funds, funds and trading desks that are trading very large quantities of stocks and futures, and there's more liquidity. And that's why when you watch any futures chart, all you have to do is turn on the volume and you can see what happens. This is all these spikes that's the open every day, and this is the volume in the regular session. This is the Globex session, the after hours and overnight and all that. So anywho, and that's where you usually see the big moves come in. So that's why I said this morning, 8:30, you're going to see the market's going to want to go one way or the other. Maybe a whipsaw. Never overreact, I should say, to the initial reaction. That's often faded. So there's your levels, little support there, trend line, that. All right, let's not beat a dead horse. You already have those levels I got out to you this morning. Same thing with QQQ. I know not everybody trades the futures, so I tried to give you both. Resistance here at about 301. Any pullbacks, same levels. You've got the first uptrend line right there. You've got some. This is really 294 that was the comparable or big support level right there on QQQ. One thing to mention, member Becky had pointed out, I just checked the comment section this morning. I use these different boards. I did have Becky point out a trend line that it comes in with same thing, the resistance levels I showed you on price resistance on the other charts, but here's a downtrend line that Becky pointed out comes in off the early April highs, and that's another trend line where we'd have a reaction. It's also a trend line. It shows, the way I have it drawn on this board here, is it's a falling wedge, a big falling wedge pattern too. So You can look at it one way, likely to get a reaction there. And we've already pretty much, we're consolidating there. We could pull back. Whether we pull back or not, a pop above it will also be a pop above that price resistance I showed you this morning in NQ and QQQ as well as earlier in this video. And so that's going to be pretty powerful. One thing you can do when you have a bullish falling wedge pattern, one of my favorites to trade, you take the widest part of the wedge and you add that to where the wedge breaks out, and that gives you your price target. That would take us up, the measured target would take us up to about 364. So I'd put, what I do when I use these measured targets, I take, again, we haven't broken out. If we pull back, let's say, the way it works is, you could pull back, have a reaction off the trend line, and then come here and break out there, and that's where you have to put the line. But if we broke out today, that's going to take us up there. And the way I use measured targets, I will align it with the price resistance, price targets that I've already determined off support and resistance levels, trend lines, Fibonacci retracement levels. In this case, I have a line here, a nice, really nice resistance, about 369, and see that measured target falls a little shy. So in that case, I would actually expect to move a little larger than the measured target if it plays out. And you flip back to my other board here, and I'll put that level up there. So that is, remember, I've given you some near-term targets that were based on what I saw last week. And then what happened when I was on vacation, as I pointed out, we had that whipsaw bear trap, which to me is even more powerful. I saw more stocks and sectors hit support and hold that support and bounce so far. And so these are what initial targets. And again, from the low, that fourth target is going to represent, if hit, a rally about 13%, which is what I've been saying for the last week or so. But this is, and I'm going to speak to this in another video today. There was a question by a member that's, wants a little clarity. Randy, all these active trades, and I'm more of a 401k trend investor, and how do I use your analysis? I will speak to that later, but in a nutshell, I'll get into a little more depth, I should say. But in a nutshell, you can marry the short-term or disregard super short-term analysis. But again, I've been preaching the same message here lately, is that I'm looking for a rally, again, off those lows of about at minimum 13%. That's right now my sweet spot, but very, very open to a rally that could go quite a bit more. And so I'm just giving you this target now. Let's just say that's my max target at this point. And I think one that's we'll see after today. Let's see how the market reacts to GDP. The more we go up, the more we start firming up the case for a even bigger rally. And so the takeaway is, this is, to me, I even mentioned it the other day. I started moving money in my wife's 401k into, for the first time in a while, back into equities, stock funds over the last several days here as the evidence continues to build. And if today's another green day, I'll probably even move some more, and then we'll be pretty darn skewed towards equities at that point, because even a 10-13% rally is a nice rally to catch. You can't actively trade in those. It's harder. There's some of those 401ks have restrictions on funds. But let me just say this: if this rally plays out, and I could easily see the possibility or the potential for this 31% rally right here off the lows, that's going to be a multi-week or even probably a multi-month rally, at least 4 weeks, if not more. And 31%. So that's the kind of stuff, to me, it's worth my while pivoting in a 401k, getting back out of cash, moving some of that money out of that, I put in bonds over the last few weeks. That's where I've been shifting for about over a month now, gradually, and then getting pretty heavy recently into bonds. And that's, yesterday, started, moving some of that money out of there and putting it into equities. So that's I didn't mean to go off on a tangent, but I'm trying to address the long-term thing. I've been pretty persistent in calling a bottom, so to speak. That was a hard post, a pretty direct post on Thursday before last, the day before I left for vacation. I said covering all shorts, and later that day, I told you I was starting to go buying the longs. That wasn't a that's that. Then that was those were swing trend shorts. All of them covered that day. So on all accounts. So that is the takeaway there. Was I'm trying to get at is for hey, I might be wrong. Just take my analysis, use it with your own and others. Will only guarantee I'll ever give anybody on this site or in trading is that I will be wrong, and I will be wrong a lot. That's part of trading. So don't put too much stock into what I say, what I do. Like I said, use it, complement it with your own analysis. Hopefully, you find it useful. But that's where we're at. So back to the targets. Let's say that 369 is hit. Let's look at the daily chart. See where that looks like here. There's a level right there. See this? This is the first target that I had on the daily chart back here when we're swinging it down. I removed those targets. That's that 339, 340th level. I remember what I've been talking about for a while now, that even before we bottomed, or right around the time, the last week or so, I view it as a bottoming process. I said another run up at the 200 days is likely. Every bear market's different. I've pointed out here, and I told you I was pounding the table there, how objective that shorting up was, and it proved to be, one of the best in decades. I've talked about scaling back in after pivoting from short to long here, and then riding some of that up, and then getting back fully and aggressively short here, and riding that wave down, and then again hard cover right there. Now, what I was saying is, in the previous bear markets, we had an initial check of the 200s. Once we took them out, these two lines here. Sorry if I'm talking ahead without explaining. 200-day simple is in blue, 200-day exponential is in red. These two lines, they pinched together right there. We had a back test of both. That was an objective shorting entry mentioned at the time, as was this. And this was the golden one. And I said back, in the previous bear markets, big corrections, it was that second test that was the last one, and then the big wave came. And that's exactly what happened. So we were able to ride that down. I wrote it down aggressively. Hard cover there, reverse, long. Stayed long, and it got even longer after that little whipsaw, and remain long. So where I'm going is, if I'm right, that's my bounce range I just gave you, is anywhere from a 13 to about 30% rally. If we come up, the 200-day simple is going to move slower. That's the one that we checked here on for about a week. You had multiple opportunities to short the 200 there, just like you had multiple opportunities to short it there. So again, bounce back to that. It moves slower than the exponential. That's why I have them both. The 200-day simple, some traders follow that one, some follow the exponential. And the reason I have them both up on the chart is for that exact reason. Some traders trade the S&P 500, some trade the Dow, and so I'll watch all those indexes, and I know that some are going to automatically, reflexively sell on a test of the 200 exponential, and so I'll watch that. But lately, this is the one that's been doing the trick. So again, I'm just trying to predict. It's turned down now, and that's also indicative of a bear market. When 200 days, the slope, the 200-day exponential is faster, so the slope of the 200 exponential turned down right here. And then the slope of the 200 simple moved down there. So they're pointing lower, and you typically only see that in a bear market. Either way, if we start to rally, then they'll both start to flatten out. And so what I'm trying to do is project. That's why I call the site right side of the chart. This is the chart right here. This is where prices are. Anything to the right is in the future. And that's what I'm trying to, predict or envision. So I'm going to see this. If we rally, that line will start to flatten out. So, to measure where it is today is not accurate, because you're not going to go there in one day. That's what I'm getting at here. So it's going to be a little lower. And again, that's just a rough guide. But here's the thing. That also lines up with it should flatten out and turn up. And that's right about that 30% rally up to that level I gave you a minute ago on the 60-minute chart right here, 369. Let's see, where was that? 360. Yeah, right about there. So this could turn up, and you're not going to get there in a day. So it would go like this. We'd have some ups and downs. It'd take a while to get there, a few months, if we hit it. So to just reiterate now, You have my max target right now, which is about that, called 369, 370, the 200-day, and my minimum target, which is T4 on the 60-minute chart, same target that was laid out a few weeks ago when we came down here right at the lows, when we hit the Thursday, the whatever day that was, Thursday the 12th of May. Okay, GDP will be out in a couple minutes, 3 minutes. I'm just going to give you some other trade ideas. Natural gas. I've been waiting. Crude, I still don't. I'm just going to tell you, I don't have a great read on crude, but I shorted natural gas yesterday. I added to that this morning. I'll show you why. Natural gas. We had this. This is a 60-minute chart. I look for these. Either this was a blow off top. I believe we were short on that one for that reason. It's not always divergences that want to make me get long or short, but that's certainly something I look for. There was negative divergence right there. See that divergent high, rising wedge. Believe that one was pointed out. I trade this thing so much in and out, but you can reference the site. Every post is archived if you just type in on the symbols ticker search on the support page, type in /NG or $NATGAS. It'll give you all the analysis there. So there it is. Wash, rinse, repeat. Divergent low right there at support 6530. And most recently, our most recent divergent high. So boom, boom. And then zooming in, this is where I took it here and added to yesterday. We had this beautiful little uptrend line right here. And again, I was focused on the equity markets. I meant to include this in there, but I didn't get to it yesterday. But it's still, I'm only showing it now because I think there's more meat on the bone. I would never. The only time I ever show a trade in hindsight, if I didn't mention before, is if there's a takeaway, valuable lesson. Every year I pass on hundreds of trades I might have taken and not mentioned, because nothing's more frustrating than to hear about, oh yeah, hey, I just shorted this and covered it for a 30% gain, but I didn't tell you about it. So I don't do that. This is an actionable trade because it just took out 574. And I may, as always, I like to revise targets or add levels, seed levels and things. I'm going to give you one right here. That would be the first target there, about 237. Second target, yeah, I'll leave it there, 7,978. Remember, these are actual support levels. If you're targeting that one or that one, I think we'll make it down here to at least this. And you want to cover a little bit above that level because buyers will often see a support level and step in earlier. Short sellers will, like myself. So if I see support at 7,978, I'm not going to set my buy to cover limit order at 7,978. I'm going to set it a little bit above because I don't want to try to eke out the last penny on that trade and miss a fill, because when the tide turns on natural gas, it turns fast. This is probably, and I've always said this, there's fewer, if any, commodities or any instruments you could trade that move so fast and could put so much money in your pocket or take so much out of your pocket in short order than natural gas, because this is just the nature of the beast. This thing goes up and down in a good day, double digits. It's a commodity that can easily, have many times seen it go up 10, 15% in a single day and then do it again the next day. So if you are risk averse or new to this game, trade it light. UNG is the one-time non-leverage ETF. What is it? KOLD is the two-time long. But you remember, you're putting juice on top of one of the most volatile commodities anyway, so there's really no need to trade with the two-time leverage unless you're just, you want to. Maybe, one good thing about the leverage ETFs as an active trader, I know they're scorned on Wall Street. There's a lot of talk about how bad they are. If you don't know how to use them, yeah, you're going to lose money. If you know how to use them, the benefit is in accounts where you don't have a lot of buying power, $10,000 in KOLD is comparable to 20,000 in UNG, or gosh, I keep saying cold. I'm sorry. KOLD is a two-time short. BOIL is a two-time long. So here's your proxies if you want to trade nat gas. UNG, non-leveraged. There you go. looking very toppy. There may be a monster short coming up here. I believe there will be. I talked about that before. We had that divergent high. We hit that for a short. But here it's wedging up. Big divergence on the daily chart here. And so this is one I just may tuck away and keep layering into. And where does it go? I can easily see this thing coming down here. That's the target. I gave you that target a while ago. 2254 in the uptrend line. That's a 25% drop if hit. All right, maybe down here as well. And then I told you on the leverage ones, KOLD is the short version. So a minute ago I said long, I meant to say short. And there it is, positive divergence. When you see a short ETF or ETN, this is technically an ETN, it's just like turning the regular one, the chart upside down. So boom. And then BOIL is the long version, and so it's just going to mirror the chart somewhat, but over time the decay that eats into these, especially in a volatile ETN like this, will distort the chart a little. So there's a trade idea for you. Nat cash short. I gave you some targets already on the futures. For those of you that like futures, but maybe the NG contract, because it's so volatile, it's a little rich for your blood. There's QG. QG is the mini contracts. Trades on the same price levels I give you here. It just has a smaller leverage factor or multiple, they call it. And so you can trade it without as much exposure. I think natural gas futures, each contract on NG is about, I think, $85,000 per contract is what it represents. You don't put up that much. Futures are highly leveraged, 10 to 1 or better on those leverage ratio. But all right, let me continue on. GDP just came out, and then I'm going to give you one more trade idea, and then we'll wrap the video up. So let's look at what the markets are doing. This is pre-market, just noise. I told you, that's what I said this morning. You've got the economic reports. Everyone's going to have to digest that, just kind of chopping around here. That shaded area is pre-market. That's a 1-minute chart of QQQ, 60-minute chart right there. Just looks like it really wants to pop this 301 level and run and come up to that third target. Remember, from this 60-minute chart, we already hit T1 back here. We hit T2 here several times, pulled back. So we already checked it. I think we'll pass go, do not collect 200, and go straight to T3 is what my guess would be. One more, I already gave you a couple individual trade ideas, some of my favorites, which include Amazon. That was Thursday before last when the market bottomed. That was one-off support. And again, I just still like this one. Hard to go wrong. I mean, it's Amazon. Beat down. And then Zoom, but I have one more for you as well that stood out. There's a million and one. It's just as easy right now, really, to trade a tech-heavy index, because tech, I think, will outperform in this rally that we're, I think, looking at here in the coming weeks. Zoom still looking good, but the other one, Autodesk. I mean, there's a million. I think I gave you yesterday Adobe as well. Autodesk. Oh, it's popping in pre-market. I hadn't even checked it today. I had it on my notes to share with you last night. And what I have here is a beautiful bullish falling wedge pattern. Positive divergence. Could probably add. I haven't even marked it up with targets, but let's just target that previous reaction high minimum. 223.25, and that's going to be about a 15% gain. That would be, these were levels on the way down. They can work in reverse now. So the next target up there, swing target, would be about 250. And if hit, that would be about a 28% gain for you. And I gave you Adobe. I believe I gave you Adobe yesterday. Another one is just, man, there's just so many bullish charts right now in the tech sector. That's why it's like I'm like a kid in a candy store. I'm being careful. I might sound a little confident right now. And believe me, if we crap out, that's what a bear market does. Beautiful charts, just like a bull market. You have some nice setups on the short side, and just as they look like they start to break down, the dip buyers come in and buy it. In a bear market, it's different. There could be a wave of selling. I don't think so, but here's the thing. we're right off these lows. This is why the risk reward, and I'm not going to be saying this much longer, the risk reward is beautiful. I will take these setups, and that's why I've mentioned being pretty heavy leveraged on the long side lately, because the risk reward is beautiful. If you buy key stocks and key sectors that support with a stop not too far below, and you're looking for 15 to 30, 40%, some cases 50% gains on some of these stocks. Adobe, I think at least is going to 470 from the low. Not that I bought it at the low, but that's 26% rally right there. And so, if you bought it in that area and you use a, say, 8, 10% stop loss, 5%, that's an excellent risk reward. All right, let me wrap up. I want to get back to trading. I'll get the video out to you guys. Sorry, this one was kind of all over the place, and I will again expand a little bit more on that comment where somebody asked some, how to best, utilize the analysis here. Because yes, I wear a lot of hats. I'm an active trader. I'm an investor. I'm a swing trader, trend trader, and I kind of throw it all out here. But I will do my best to, try to speak to each of those disciplines when I do these videos and kind of highlight them, what might just be a short-term trading op and what's more longer term. But I think I've been pretty clear over the last few weeks that I'm looking at the likelihood of a tradable, when I say a tradable, I should say swing and trend tradable rally in the markets. And as such, that is where a 401k investor might say, okay, I'm going to make a change now. I've been in cash or in bonds only, and now might be time to nibble on some stocks for the next, most of those trading restrictions are only 30 days, and I see more than a 30-day rally, a potential for that, I should say. All right, I'm wrapping it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.